Welcome to the Capital Exchange. I'm Steve Wilbur, Managing Director at Allen Capital Group.
And I'm Travis Portwood, Chief Investment Officer with Allen Capital Group.
Travis, we've talked about concentrated markets this year.
A little bit.
Yeah, and how they are susceptible to these shocks. Well, we've seen some shocks recently. With the war breaking out in Israel, the Speaker of the House suddenly being ousted from Congress.
Yeah.
From a seat anyways,
Yeah.
maybe not Congress.
Yeah.
Those two events obviously can cause some market volatility.
Yeah, and we've seen markets react to the geopolitical surprises in a knee-jerk manner, as they often do, attempting to process that new information. Wars can reshape trade alliances and supply chains, but that reshaping generally takes place over longer periods of time, and it's hard to predict the effects, over the short term. So as the dust settles this week, we've actually seen markets move higher.
It's crazy.
Yeah, almost as if, they're saying, hey, we've seen this before, and perhaps, the Russia-Ukraine war has somewhat numbed markets to conflict here recently.
Yeah, that's so true, Travis, and the media doesn't help.
No.
Like we've said in the past, generally media is after eyeballs, and nothing draws attention better than fear.
Absolutely.
This is why having an investment plan in place before the events happen is very important. When you have a plan in place, you know you can withstand different outcomes. The short-term dust-ups like this, they just don't matter anymore as much because you have the confidence to focus on your long-term horizon and what you're trying to accomplish in your plan.
Yeah, and longer term, monetary policy and company earnings are going to be the key drivers of return. And speaking of earnings, Steve, we're rolling right here into third quarter earnings season. And Wall Street's anticipating a pickup in company earnings here in the third quarter. According to Wall Street Journal, S&P 500 earnings per share growth is expected to come in around 1.3%. And if you take energy out of the equation, it's expected to come in at about 6.2%, which is better than negative earnings growth we saw last quarter.
Yeah.
And in Wall Street fashion, they're anticipating fourth quarter earnings growth to be double digits, 10%. We'd all like to see that, but time will tell, because with elevated inflation and elevated interest rates, plenty could still go wrong, which again points us back to what you just said. Having your plan in place beforehand is so important. You can focus longer term, ignore the short term.
That's so true, Travis. It's been great. Look forward to it next week.
Look forward to it as well.